Okay, this is the last module of the course, but this is not the last lecture. This is recovery management. Let's start with the fundamentals of recovery and what are the procedure of recovery and what are the action available for recovery for the lending institutions. This will be there are 4-day course we are discussing step by step. Right. So when we talk about the banking industry, it is very happy to increase the deposits. Deposit makes the banking possible. Because we need the money. More money we are collecting from the customers as deposits, we have more opportunities to lend. More opportunities lend means we can increase the profits. So that's why banking possible. The objective banking or any financial institution to increase our profits or what you call return to the shareholders. Lending makes banking profitable. That's what it says. When you increase the deposits, you have more opportunities in lending, funds available, so we earn profit. But after granting facilities, lending, next step, NPA, non-performing advances, makes the bank perishable. Now we are talking about the third one. First one is the very interesting to do, that is general banking. Lending comes to general banking, but the final is today we are going to discuss is NPA, non-performing advances, making banking perishable. This is disastrous. When you cannot recover what you lent from the customer or the borrower, it's perishable means the bank or the finance company has to close down, making losses. Senior bankers, so pioneer bankers, define the loan, LOAN loan, as loss of assets due to non-payment. That's why you call NPA. Loss of assets due to non-payment. Whose assets? Yeah? Whose assets? This is a problem which is not in the classroom. The classroom, you can ask from each and every person, go to the close and ask. But here, I can't see you. So I am anticipating for your reply. 1 or 2. But whose assets is making losses? Earlier slide we discussed when NPA increase is perishable. So loss is to the banks, our assets. Loss of assets due to non-payment. If the customer not paid the loan back, facility back, it's a loss to the bank or the financial institution, or the lending institution for that matter. Right? So loss of due to non-payment, the loss can be incurred in two ways. One is when the loan is not paid, your income is declining. Once your income is declining, right, your survival is under threat. Why you can't pay dividends to the shareholders and share prices will collapse, ultimately end up with disasters. That is one side. On the other side, when increasing our losses on the assets losses, our NPA, that is our assets, our loans are appearing in the balance sheet as our assets. Okay? So when the NPA is increasing, right, our assets quality deteriorates. That's the second problem. Asset quality getting deteriorated. Why? The performance indicator of institutions, one of the indicators is ROA, return on assets. It's a percentage. So the ROA, return on assets, comparatively shows the strength of a financial institution. If the non-performing assets are increasing, right, and the income is declining, your ROA, return on assets, will decline. When the ROA decline, on the other hand, what will happen? You can go to the market and mobilize money. If you need any long-term finance, you go to issue debentures or issue shares. But what happens when the share price, when your ROE is declining? So the investors always look into your balance sheet, the figures, right? So investors always observing performance of an organization before they invest. So once your ROE is deteriorating, you find difficult to sell your assets. This is the problem. In the past, the banking industry in Sri Lanka, we found a number of instances. This happened. This happened to the banks. Right? If you go back to our banking industry history, in 1990, when the Debt Recovery Act and the Recovery Bank Special Provision Act was published, it has happened to Sampat Bank. The shares were trading at the rate of 35 rupees. Within a week, it declined to 8 rupees. That is because NPA was increased, right? It was published in the newspapers. This is the problem. It's a problem. You may see nowadays, number of finance companies cannot survive because the assets quality is deteriorated. Asset is not generating any income to pay back to the depositors. There's a problem today in the market. So the entire industry, financial service industry, is in a threat. One of the organizations facing difficulties means it has a chain of impact on the other organizations, other banks and finance companies. It's a chain of impact. So we had to survive. That's how is defined earlier senior bankers or eminent bankers, as the loan is loss of define the loan as loss of assets due to non-payment. Okay, let's go see something more. Impact on number of advances. Financial industry is the first law of finance. It is the first law of finance is return of your capital is more important than return on your capital. Did you understand? Understand this one? Return of your capital. What is return of your capital? Can I hear from somebody? What is return of your capital? No response. Return of your capital is recovering your money lent, the capital. Return coming back the money lent is more important than return on your capital. What is return on your capital? It is interest. The recovery of capital is very important, more important than recovery of interest. This is the first law of principle of finance. Now, do you agree with this? How do we apply in our industry, banks or financial companies? What we recover first? Capital or interest? Indeed, manually also first we recover the interest.
Interest.
and not the capital. Even our systems have been developed to meet whenever customer deposit money, first set off for the interest, but not the capital. Capital second. It's not given the prominent for recovery of capital. Now let's see impact on this. When the bank, for example, we take a bank as example, when a bank cannot recover their capital lent, whose money are lending? Others' money. It may be deposits, it may be borrowed capital, debentures, or it may be share capital, external capital, external people. So we have a liability to pay back their money as and when they call. In the case of deposits, it's the liability of the banker under the Banking Act No. 30 of 1988, Section 86, clearly defines deposits payable on demand. When customer asks for the money, we have to return their money. So returning capital is very important. You can say, no, we gave the money to some borrowers, they are not paid back, therefore unable to pay. It's disastrous. But what has happened to the golden key? It can happen to us any moment. So the capital recovery of capital is the first priority. But we cannot forget about recovery of interest, because that's our survival, our growth. We need our day-to-day needs as well as our growth. We need the interest also, right? Therefore, we'll see how this applies. Now, at present or whatever, practically, whenever we for the recovery of a loan installment, first we set off the interest. Whose principle is this? Whose principle is this? This is the street lenders principle. Poli Mudalalage principle. But they don't want to recover the capital. They want to recover the interest on the due date. Why? So their survival depending on the interest. Right? Street lenders, their policy is that. It is not the institutional lenders should be the policy. But we cannot consider this important. Why? Our system has already developed in this manner. We are already doing that. But there's nothing wrong in this also if you look back. This principle. Now, if you recover a regular loan in regular section, facility in a regular section, you recover. If you recover interest or capital first, does not matter because simultaneously you make the recovery. Simultaneously, both has been recovered. Therefore, it won't be a problem. So this principle applies for regular facilities, both these funds. But when it comes to recovery of non-performance, it is a principle that applies because we have to understand the gravity of the recovery. Why a customer defaults? Why the reason? From our point of view, all the customers are willful defaulters. Let's see, when analyzing the position, you may find that it is not the story. If you look at most of 99% of the borrowers are ready to pay back, but due to some reason they have been defaulted. For some reason. Now, our job is, when you go for recovery, to find out, understand what made to default, what caused for the default. Identify the problem of the customer. Okay, Identify the problem of the customer. Because customer defaulted because he's in a difficult situation. If you understand that difficult situation, we may be able to find a solution to overcome that situation. Then our recovery is easy. Because keep in mind, customer's problem is our problem. Customer's problem is our problem. If you solve customer's problem, our problem is automatically solved. NPA is our problem. Why is NPA became our problem? Because customer had a problem. So if you solve the customer's problem, our problem automatically solved. That's the principle that applies. Okay, so when it comes to default, recovery of default advances, we have principle as practical bankers. We have principle applying to look into this aspect. Now, whenever customer defaulted and we negotiate with the customer, discuss with the customer, we come out with some solution to pay installmentally or some amount. What happens whenever he comes and deposit in your account? The system will take entire amount for the interest. What will happen? What will happen? Your problem is solved, customer problem is not solved. And your problem is also not solved. Why? Still the NPA is outstanding. You have got an income. You have got an income. But on the other side, the NPA is still remaining in the same place. It is not changed. So what is the use of that recovery? If you cannot reduce your NPA, what is the purpose of recovery? Therefore, it's very important. The first law of principle. You have to apply first to recover the capital, then go for interest. It doesn't mean that we are foregoing interest. No. We are recovering interest also. Therefore, whenever come to recovery of NPA, non-performing advances, normally we adopt the principle of proportionate recovery. Know the point? Proportionate recovery. That means whatever customer deposits for settling of the NPA, we recover a part for capital and part for interest. It can be 40-60. You go for 60% capital, 40% interest, or 50-50, 50% capital, 50% interest, or other way about, 60% capital, 40% interest. Depending all these decisions, we have to take, discuss with the customer, looking at the customer's repayment ability, when the customer can pay back. Most of the instances, our recovery fail because we apply some rate. One know before such and such a date, pay this amount. We are not looking at the customer having a cash flow to pay or not. We are not bothered. So our effort on recovery is limited to that letter. Nothing will happen. No more practical. Find out what has happened to the customer. Why the customer's income has been deteriorated. Try to solve that problem. Then you can make recovery. Right? So you may think that it will affect our bank. Right? Yeah, it is have a twofold. Before that I come, there are two folds. Two important factors in the recovery of this capital proportional recovery. It is benefited to the customer as well as to the bank. Benefit to the customer. Why? When you proportionally recover the capital from the customer, his liability for payment is gradually reducing. So his pressure on repayment is gradually reducing. He will be eased in that situation. The stress situation you can reduce from the customer. Secondly, when the customer we proportionally recover, the interest component to be paid by the customer also coming down because he had to be defaulted for the reason some financial problem, difficulty. So without putting a burden on the customer, we try to reduce the burden. So when you recover the capital, your interest recovery also still back gradually coming down. So it's benefit to the customer. It's benefit to the customer. On the other hand, it's benefit to the bank also. How it's benefit to the bank? It is benefit to the bank because when you recover capital component proportionately, our NPA level comes down. Our non-performing advances level is gradually decreasing. Therefore, our ROA can be improved. When the asset quality can be improved, our ROA will increase. Our investors will look at our figures. So when your NPAs are reducing, the investors will look at your financials. So you're publishing every 3 months your financials according to the Companies Act and the Banking Act. It's compulsory. So whoever investors in your organization will go through these figures. So when you're reducing NPA levels, it's very important to understand that it has a benefit to the bank. Now, someone will argue with me. Normally comes this argument. What will happen to our income? If you are not recovered interest or proportionately recovered interest. For example, we recover 60-40. 60 capital, 40 interest. Our interest component still remaining or only very slightly reduced. Every month that will be accumulated. Therefore, we are losing. Our income will deteriorate. Right? That's on the surface of it. When you go into detail, you may find that there's a benefit on that also. What's that? When you recover the capital, right, the asset, your NPA levels comes down, and whatever you provisions made on the capital, NPA will be returning back to your profits. So your profit will not get any effect. Now this is the hidden part of it. The bankers not understood this part. Whenever you recover capital, when you reduce a capital component, NPA component, that the difference will be whatever you made the provisions will be come back to the profit and loss account. So the profit will not any effect. So we'll understand this. How best we can do this. So the principle of finance when you come to recovery management, go for best option is negotiate with the customer, analyze the customer's cash flow. According to his customer's availability of cash flow, you adjust your recovery, getting a benefit to the customer as well as to us. We are not Shylocks. We are not Shylocks. Bankers are not Shylocks. That's moneylenders are Shylocks. We are institutional organization. We are not Shylocks. We are Masraatala Vildana Shylocks wala nemi api. Customer පැත්තට බලලා, look at the customer side. Try to help the customer to get rid of his financial difficulties, because our business is that. Our business is depend on the customer's financial difficulties. Otherwise, no one will come and borrow from us now. So we try to solve that. So you can go on continuing the business. Right? So whenever it comes to recovery of NPA, apply the principle of proportionate recovery. It will benefit to the customer as well as to the bank. Twofold. Both sides is benefited. It's a win-win situation. It's a win-win situation. Both parties will win. Understood? Okay. Right. Now, look at this picture. Right? The banker is looking at the past due, and the bank is trying to recover. How you recover? You see how he recovers? Can you see? කකුල් දෙක උස්සලා සාක්කේ තියෙන කොම හලනවා. ඒ වගේම බිම දාගෙන පාගෙන. This is Shylock's method of recovery. We are not going for recovery of this method. No, definitely do not. That's why earlier slides I discussed with you. It is the negotiate both parties and go for recovery. It's important. Right. So what is recovery management? Recovery management, when it comes to recoveries, we are talking about defaulted facilities. We call about recovery management, it's not the regular recoveries. It's not regular recoveries. Talking about recovery management is defaulted credit facilities. When it comes to recovery of default facilities, it's involved in enforcing collaterals. Right? So that means the final option available for the banker or the lender is to enforce the collateral. Sell or liquidate and try to recover the loan component. Whatever collateral given to the organization, the institution, we enforce. What is mean by enforce? A legal enforcement. It's involved legal enforcement of the collateral. So therefore, very important factor is coming here. To what extent our collaterals are enforceable in the case of a default? Whenever we take a collateral or a security, we have to look into a number of principles whether it can be enforced with the least cost. The least cost. අවම පිරිවැයකින් liquidate කරන්න පුළුවන් collateral තමයි best collateral එක වෙන්නේ. So therefore, when you selecting a collateral for lending, select freely enforceable, easy enforceable collateral. It is liquidating the asset charged to the lending institution. Finally, recovery management comes to liquidating the assets charged to the lending institution. Charge means legally assigned. Lending assets legally assigned to the bank. It is therefore recovery of default facilities and security documentations are two sides of a coin. Understood? Very important. So recovery, what is recovery management? In other words, enforcing the securities. To enforce the securities, assets charged to the lending institution, the documentation should be perfect. Now here this is the place we are lacking. To what extent we can satisfy that our documentation are perfect? To what extent our documentation are perfect? When it comes to legal action, only we are looking at the documentation. At the time of granting the facility, the documentation part is not seriously looked into. What are the legal requirements in the documentation? Very important. So this is very important. To enforce the security, your documentation has to be perfectly executed. Executed should be in a perfect way. There should be a registration procedure, some of the documents. That's been with the registration according to legal requirement, stamp duty payment, for the documentation part, then the executing part, who has to execute the document, who are authorized to execute documents, all these matters. All these things are at the time of granting the facility, not at the time of recovery. If you have done it perfectly, your recovery will be easy. Your recovery will be easy. If you make a error or mistake, I don't call this word mistake. There's no mistake in the vocabulary of banking industry. You don't have any mistakes. You have to be 150% perfect. Any error in the documentation at the time of, you cannot rectify it later. The customer, if you call the customer for any correction of a documentation, he will never come. Why? He knows that bank is in a bad wicket. Therefore, he will never comes. He may capitalize that situation to default. Because he knows definitely bank has no legal point to fight the case. The documentation, registration procedure are not done correctly. Documents are what do you call, not executed according to the legal requirement. These are the important factors. So the recovery management is very important to understand is that documentation should be important, and we enforce on the document. We're depending on the documents for recovery. Test recovery management. The concept of test recovery management is, we'll see what are the things. This management process needs to start at their own initiative stage. When we start recovery, when do we start recovery? Is it before granting the facility? What is the first question you're asking for the customer? When the customer comes for a facility, what is the first question you're asking? How are you going to repay this facility? What is your income? What is your cash flow for a business? Whether it is sufficient to pay back your loan. So recovery starts prior to lending. Management process needs to start the loan initiative stage itself. The first question is, we have to ask that. It is not the collateral will pay back the loan. Collateral will not pay back the loan. මොකද ධ්‍යාන හොඳ සිරකමක් ගත්තා කියලා loan එක ගෙවෙන්නේ නැහැ. ඒක customer ට ගෙවන්න හැකියාව තියෙනවා. Customer should be able to pay back the loan. Effective management of recovery and non-performing assets comprise two prolonged strategies. Effective management of recovery and non-performing asset comprise two prolonged strategies. What are these two strategies? First relate to arrest in the default and creation of NPA thereof. Arrest in the default, not allowed to transfer the default. That is very important. After granting a facility, we have a follow-up monitoring supervision procedure. Why? To arrest any defaults. Any warning symptoms, immediate action has to be taken to arrest the situation before coming to creation NPA thereof. Now this component we call as remedial management. Recovery and remedy. There are two components. Remedial management is remedy the situation before it becomes worst. That's called arresting the defaults. And second is the handling of loan delinquencies. That's recovery management. After transferring to NPA, to do the recovery management, that's the procedure. What's the procedure you adopt for recovery? Non-performing. So there are two components of two ways of what you call remedial management is effective. One part is before the facility is getting defaulted. That means not even one installment, right? If you see the warning symptoms, customer problem, immediately you take the action to resolve that problem. That's remedy. The second part of remedy is, right, customer has now started defaulting, but still it has not gone to NPA. But still not gone to NPA. That is before 90 days. After 90 days only we are transferred to NPA section. It's treated as NPA. Before that it is not treated as NPA. So arresting that going to NPA also remedial management. Okay, there are two ways of doing remedial management, two components. One is arresting default, that is see whether before installment getting arrears, stop that. Secondly, after defaulted, before 90 days, you recover before it goes to bad. Right? That's called remedial management. So very important to understand what are the steps involved in recovery management. First part is remedial management. The second component is going for recovery management. The tenets of financial sector reforms were revolutionary, which created sense of urgency in minds of staff of bank and give them a message that either they perform or perish. Any country, the financial sector, forms revolution that create a sense of urgency in mind of the staff to go for recovery about this part. Whether you perform or perish. In 2008, the last recession time, 3,900 banks were collapsed in the world. They could not survive. 3,960 odd branches, banks worldwide collapsed. You may see in Sri Lanka at the moment, this part is coming with the finance companies. Still, the banks are on the strong side because of the central bank supervision and controls are very strict. Therefore, they survive. But weak in supervision of the finance companies. Either they perform or perish. What is the impact of perish? If a company is closed down, what will happen? It is not only the depositors, even for the staff, you lose a job. So it's a mind of the staff, bank staff, that either you perform or perish. You lose your job. The prudential norm has forced the bank to look into the asset quality, maintain the asset quality. We're talking every time about the asset quality, maintain the asset quality. Recovery is defined as a process of regaining and saving something lost or danger of becoming cost. Right? Recovery is to regaining a loss. What is loss? If customer not paid, you have to write off the facility. It's a loss. Recovery is avoid that and try to process it. Or loss or danger in becoming cost. Improving recovery management is and are requiring expeditious and effective actions in legal institutional and judicial processes. So banking sector, recovery, improve the recovery mechanism, the legal institutional side of the legal side, and the judicial process has to be improved. But if you look back in our industry, In 1990, 13 enactments passed in the parliament to expedite recovery of lending by the banks and other financial institutions. 13 enactments has been passed in 1990. Debt Recovery Act of 1990, number 2. Recovery of Bank Loan Special Provision Act, number 4 of 1990. Amendment of Mortgage Act 1990. Amendment of Trust Assets Ordinance 1990. Agrarian Service Act Amendment 1990. Like a number of all these benefits to the bank. But what's the position of the banks today? Are we using these legal institutions or judicial processes? To what extent we are using this? It's pathetic. It's pathetic. Banks at present experience considerable difficulties in recovering loans and enforcement of securities. Charge with them. It's problem. අපිට උසාවි ගිහිල්ලා නඩු දාන්න හැකියාවක් නැහැ අපේ documents weak. If you file action in the court, chances of getting a favorable judgment very, very rare. According to the statistics at the Colombo district courts, I have an investigation for that. 90% of the facilities, the cases filed in the courts are being judgment was against the bank. Why? Our documents are weak. Our documents are weak. I'll come next sessions how our documents been challenged in the courts. Our documents are challenged in the courts. We'll discuss court cases. All are practical cases we underwent. So we have to understand that position. It is not easy. Recovery is not easy job. It's a very, very difficult process. You will understand that. So, to make recovery easy, we discussed on the other slide, grant a very quality facility. That is, should be cash flow or the customer's income is positive, very good, stable, and your collateral has to be documented perfectly. These two are the factors affecting our recovery. These 12 factors are affecting our recovery. So we have to, therefore, recovery management is not sending a letter to the customer, pay the loan or no before such and such a days, or otherwise we'll file action. That's the most disastrous action in recovery. Most disastrous recovery. Okay. The tenets of financial reforms are the existing procedure to recovery of debt due to banks has blocked a significant portion of their funds in unproductive assets, the value of which deteriorates with the passage of time. The existing procedure of recovery of debt due to banks has blocked a significant portion of their funds in unproductive assets, non-performing assets, the value of which deteriorate with the passage of time. We look at our balance sheet, bank's balance sheet. Where are NPAs appearing? Have NPA affected? It is in the current assets. Our whatever loan granted is amount is in the current assets, is operational. So whatever NPA is, they are in the current assets. So you make the provisioning from that. There's another component which most of the bankers have forgotten. Most of the bankers have forgotten very important uh, position in NPA. What is that? I'll extend with an example. Now, you have taken a property mortgage. Customer has defaulted. Right? What is the recovery option you have available? There are two options. If it's over 5 million, you can go for parade. Less than 5 million, you have to file a hypothetical action or a mortgage action in the courts. Right? Two options. End of the procedure, finally it comes to sale of asset. Parade, in the parade also, final option is public auction, you have to sold the property and recover the money. In the court cases also, court will sell the money, the property and collect the money, you have to collect from the courts. Okay. In the history, what is the successfulness of selling properties in the public auction? To what extent banks are successful in selling those assets? Even the public auction by the courts, most have failed. Why? There's no bias. There's no bias. Due to a number of reasons, the buyers are reluctant to come forward to bid from the auction and buy. No? Very rarely. Number one problem is if the customer comes, if a person comes for a bid in a public auction, he has to face income tax problems. He will have to declare from where he got the income. There are cases. Secondly, he may wanted to undervalue the property to reduce the stamp duty. Now you can't do that. Now things are changed. This type of underhand activities, most of the people are not coming for. Therefore, ultimately, the bank has to buy. If there's no buyers in the public auction, bank has to buy. Why? If the bank has not bid and buy, the ownership will not be transferred. In the mortgage property, legal ownership with the bank or the financial institution. Legal ownership is there. But possession has not been transferred. To transfer the possession, it has to be done by. So bank has to bid and buy in the auction. Now comes the problems. At what rate you have to buy? You have to buy at the above the upset price, not below the upset price. Upset price earlier before 2011, upset price we were fixed only the amount recoverable, interest amount and the capital outstanding. 2011, with Amendment Act of in the parade, it has been changed. We'll discuss that later with that question. It has been changed. So we had to buy at the upset price. Upset price is the, according to Central Bank regulation, we have to fix, take an evaluation report on the market price. Upset price has to be fixed on the market price. So you cannot bid below that. This is above that only you have to bid them by. Okay. Then buy above the market, the upset price. Right. What will happen when you buy at that rate mean there's a gap between the your recoverable amount and the market price. That difference should go to the customer. That profit goes should go to you go to the customer because central bank does not allow to make profit from the customer's property after selling the customer property. You cannot make a profit on that. No, it's not allowed. You have to give to the customer. Okay, now see where we are running for. Now, when after buying this property, okay, where it is appears in the balance sheet. Because this is no more in the outstanding current account, what your current asset section. You have already recovered that amount. After bank has buy, it has been recovered. It has been settled in full. There's no outstanding in the NPA in the account. So where this asset has been shown, කොයිද මේ asset එක තියෙන්නේ? Balance sheet එකේ. It is in the fixed assets. Fixed assets වල තියෙන්නේ. ඒක මොකද? Fixed assets in a property is an unproductive asset. It will not generate any income. Therefore, not NPA current assets වල තියෙන වගේම fixed assets වල තියෙන unproductive assets වල effect එක මොකද්ද? What's the effect? RO will decline. Return on asset will be declined. See? What is the ultimate position? So we end up in disasters. We have assets have been increased, but no income is coming in. Gradually, industry is sinking. Gradually sinking. So understand the recovery management is very understand very carefully. What's a non-performing asset? From the bank's point of view, for the depositors, we have to pay interest. On the advances assets, we are getting interest. So we can pay the liability, assets and liability. Whenever our lending part is getting NPA, stress loan, or NPA, the interest component is not coming back to the bank. Therefore, servicing of depositors' interest is some difficulties. That's what we have seen in the currently all the finances companies, the problem. NPA levels has been increased, incomes has deteriorated, there's no way of paying interest to the depositors. So they collapse. Is the ultimate result. Understand that. So we have to control the NPS. We have to put an alarm system, early warning system. So we'll discuss later, not next session. So session after that, we'll discuss this early warning signals. All the bank has to connect to all the external factors to get warning signals. From the customer, external factors, to get these signals. Okay. Let's see what's the percent position of the banks. 2019 report has not been yet published. So we'll look at the 2018 annual report, what it says. Central Bank Annual Report 2018, it says risk in the credit risk in the banks. Quality of credit of the banking sector deteriorated considerably during 2018. Central banks announces that entire banking industry, the credit quality has been deteriorated, with non-performing loans NPLs increasing by 102.5 billion. Vidastahate NPA කොටස 102.5 billion compared to increase of 18.3 billion in 2017. Vidastahate NPA ප්‍රමාණය 18.3 billion, whereas 2018 102.5 billion. Now 2019 report එක ආවේ නැහැ එළියට. අපිට බලා ගන්න මොකද්ද position එක. I think 2020 is going to be worse. 2020 is going to be worse with the current present situation. The challenging global and domestic market conditions that prevailed in 2008 maybe have contributed to the deterioration of quality of credit. Now, this was the explanation given by the central bank. Challenging global and domestic market conditions. We are responsible, all the bankers, we are responsible for this 102 billion transferred NPA. It means during the year, whatever we are granted, entire thing has gone bad. What is the credit quality? So the more you transfer to increase NPA, the pressure on recovery is increasing on us. However, high increase in NPL had resulted in decline in specific and total provision coverage ratios 49.6% and 69.9%, and at the 2017 to 43.1% and 57% at the end of respective. Provisioning part consequently, gross NPL ratio increased from historically low figure of 2.5% at 2017 to 3.4% at 2018. 2019 වල සංගා figures එකද බලමු මේක කියනවා. Just I hide some. Fish report එකත් බලමු. Right? NPA ratio එක 2.5 තිබිච්ච එක 3.4 වලට 2018 වෙනකොට නැගිනවා. ඒ 2019 මාර්ච් වෙනකොට ජූන් වෙනකොට 2019 ජූන් වෙනකොට මේක 6% වලට වැඩි වෙලා තියෙනවා. The total loan loss provision increased by 38.9 billion during 2018. Out of specific provisions accounted for 86% of the increase. But the specific provisions over 90 days. The 38 billion වලින් 86% තියෙන්නේ මාස 3 ඉක්මවෙච්ච ඒවා. This is a central bank report of the industry. If you put in graphical form, you can see the net gross NPL and net NPL. Gross NPL mean without making provisions. Net NPL means after making provisions. Now look at your bank. Where do you stand? Bank of Ceylon, 2017, it is less than 2.7%. It has increased to more than 3.5%, 3.7% වගේ තියෙන Bank of Ceylon. People's Bank still good. 2.5 will maintain, 1.5 last year, 2017. NSB is it's lower, no? Commercial bank, it is 3%. HNB, it is 2.5% again. Sampath Bank, Bank of Ceylon ළඟටම ඉන්න Sampath Bank. Sampath Bank increase last year this year. Bank of Ceylon increase මෙච්චරයි මේ ටිකයි. Sampath Bank increase 1.5 වලින් ඉඳලා 3% වෙනවා. කියනවනේ අපි තත්ත්වය මොකක්ද කියලා. Ceylon Bank is the champion of the NPA. That's the hardly 6% වෙනකම් වැඩි වෙලා තියෙනවා. industry එකේ most vulnerable bank කියලා තියෙන ශ්‍රී ලංකාවේ. NPA levels වලින්. NDB වර්ධනය වේගෙන එනවා 2.5. කියලා DFCC එකත් 3.3% වල තියෙනවා. NTB එකත් over 4%. Foreign banks are loans දෙන්නේ නැත්නම් එච්චර දෙයක් නෑ. Now this is what we have see net position. Net position means after making the provision. Right? Still Ceylon is highest. Only bank of provision ගිම ඔක්කොම අඩු වෙනවා මේ loan loss provision වලින් අඩු වෙනවා but Ceylon bank still in the highest level. So now where do we stand in the industry of the NPA? So recovery is important. This is the priority of the industry. Priority of survival of the organization. Right? මම statistics දුන්නේ KPMG reporting ගත්තේ මම. Liquidity ratio එක ගත්තොත් 20% liquidity ratio එක maintain කරලා highest in industry එකේ and ඔක්කොම liquidity ratio එක maintain කරන්නේ normal level එකේමයි. But HSBC is a Standard Chartered, they are very high liquidity position. Strategic liquidity situation 20% වල වැඩි minimum 20% දෙන්න ඕනේ ඊට වඩා වැඩි. Right. ඒකට credit deposit ratio එක ගත්තොත් that means credit deposit ratio means deposits selling how many percentage you are granted as facilities. So Bank of Ceylon, People's Bank, NSB, Commercial Bank, HNB, Sampath, Ceylon, in Miocoma, and the NTB, SCB are deposits were 80%, 89%, 85% like the way credit deposit ratio. But DFCC more than 100%. You can tempat වලට වඩා වැඩියෙන් 100ට වඩා වැඩියෙන් deposit දෙනවා. ඒ වගේ HSBS ඒ position එකමයි. This is 2018 situation. Right? So this is the industry situation. Okay. Sri Lanka Bank asset quality regulate NPA ප්‍රමාණය restructured loans in loan restructuring කරාට පස්සේ banks වශයෙන් ගත්තොත් 2016 2017 2018 2018 වඩාත්ම vulnerable banks මොනවාද? Asset quality deteriorate වෙන එකේ ඒ කියන්නේ percentage බලන 5% වලට වඩා අඩුයි large banks විශාල bank. පොඩි bank වල තත්ත්වය මොකක්ද? Small and medium sized banks. Regulated NPA is 5%, restructured percent එක ඊට පස්සේ 6% මේ තමයි පොඩි amount එකේ restructure කරලා තියෙන්නේ. ඒක දෙන Fitch ratings මේක දීලා තියෙන්නේ මම නෙවි. Fitch rating by the banks. ඔක්කොම එන්නේ මට where we අපි NPA position එකේ bank sector එකේ ඉන්නේ කොහෙද කියලා බලා ගන්න. Let's see 2019 first quarter එකේ තත්ත්වය මොකක්ද කියලා. Sri Lanka Bank bad loans rise 64% in first quarter 2019. මේක Fitch rating එක. Economy Index එකේ website එකේ මම ගත්තේ. Bad loans at Sri Lanka's banks have risen 64% in the first quarter of 2019. The worst since 2013. When gold-backed loans went bad. 2013 තමයි gold prices collapse වෙලා NPA level එක වැඩි වුණේ අපි. ඊට වඩා වැඩි වේගකින් 2019 මේ first quarter එකේ අපේ NPA level එක වැඩි වෙලා තියෙනවා. So 2017 තිබිච්ච තත්ත්වයේ අපි දැක්කා කොච්චරද කියලා 18 බිලියන් ට්‍රාන්ස්ෆර් වුණා 2018 වල 102 බිලියන් ට්‍රාන්ස්ෆර් වුණා ෆස්ට් ක්වාටර් එකේ 64% වලින් වැඩි වෙලා තියෙනවා 2019 ෆස්ට් ක්වාටර් එකේ ඉන්නේ බැංක්. But banks are also facing difficult raising capital. Weak asset quality and earnings will add to pressure on the capital, and many small and medium-sized banks still need to raise equity capital to meet enhanced regulatory requirement of 2020. These are the difficulties we are facing today, problems we are facing today. This will be sometime maybe due to the corona and other difficult situation we had in the country may increase. However, they face execution risks. Recent right issues by Sri Lankan banks have been significantly undersubscribed, with investor deterred by microeconomic instability. Non-performing loans take up very anyway. Now, what is this? The 20% katandari mukante. 2020 katandari mukante. Italy appeals. Fish rating, the problem, the biggest problem we were anticipating in the 2020 is, according to Central Bank regulation, Central Bank in 2018 will issue a circular. By 2020, all commercial banks, licensed commercial banks, has to have a capital, equity capital of 20 billion. 20 billion, yes. And 10 billion has to be increased to 20 billion. By end of 2020, the last is said December 2nd, this is the circular issued by Central Bank. The may deteriorating that banks වලට පුළුවන් වෙයිද මේ task එක recover කරගන්න. There are two ways of increasing this capital. One is issuing share capital, other one is increasing the what you call income. Profit එක වැඩි කරලා profit එකේ retain profit එක වැඩි කරන්න ඕන and increasing the share capital. When NPAs are increasing, income is deteriorating, facing difficulty in increasing the retain profits. On the other hand, however, they face execution risks in the right issues by Sri Lanka banks have been significantly undersubscribed. Share issue කරන්න ගිහිල්ලා බැංකුවල ඒක undersubscribed වෙලා failure වෙලා තියෙනවා. Why reason? This unsustainability position in the country. Banks position එකයි. Sector net profit have been fallen by 9% with impairment charges doubling. Banking sector profit 2019-18 වලට 9% වලින් අඩු වෙලා තියෙනවා. Entire banking industry profits level එක 9% වලින් අඩු වෙලා තියෙනවා. Reason එක impairment regulation. අපි කතා කරමු මොනවද කියලා ඉස්සරහට. In addition, debt recovery levy imposed in 2018 will push effective tax rates higher, further squeezing profit. 2018 budget එකේ මංගල සමරවීර මහත්තයා හොඳ වැඩක් කරා. මොකද banks වල ගාව tax එක debt recovery levy කියලා. දන්නවද? bankers දන්නවද මේක? debt recovery levy මොකද්ද මේ debt recovery levy කියන්නේ? profit එකෙන් 7% දෙන්න ඕන government එකට රටේ ණය ගෙවන්න. foreign debts ගෙවන්න. විදේශ ණය ගෙවන්න ෆන්ඩ් එකක් හදලා තියෙනවා. ඒ ෆන්ඩ් එකට banks වලින් recover කරනවා. all commercial banks, specialized banks, 7% from their profits. 2018 වල මේ tax එක ගන්නේ. සන්තෝෂයට කරුණක් කියන්න ඕන. බන්දුල ගුණවර්ධන මහත්තයා 2016 මේ ආපු හැටිම ප්‍රෙසිඩන්ට් දර කියලා යහපාලන ආණ්ඩුව ගාව ටැක්සස් ඔක්කොම අපි ඉවත් කරයි කිව්වා. ඔක්කොම අයින් කරා. මේකත් එකට. මේකේ ඉම්පැක්ට් එක නැහැ කාටවත්. බැංක්ස් වල විතරයි ප්‍රොබ්ලම් එක තියෙන්නේ. ඒකත් දැන් ණය ගෙවන්න අධිකරු ෆන්ඩ් එක මොකද යහපාලන ආණ්ඩුවේ කරේ ඒකත් මේක අයින් කරා. දැන් ණය ගෙවන්න ණය ගන්න පිටි. අතිරෙන් ජෙනරේට් කරන්න තිබ්බ සිස්ටම් එක අයින් කරා. කොයිතරම් දුරට යථාර්ථවාදී කියන එක කල්පනා කරලා බලන්න. To what extent is justifiable? Anyway, that's politics. Anyway, this debt recovery has been removed by now. Therefore, that pressure has gone out. So last year, 2018, reduced by 9% due to debt recovery levy as well as impairment regulations. Small banks had higher debt loans, which said impaired loans across close to small banks are climbed to 7% by end of 2018. Small banks, පොඩි බැංකු වලට NPA level එක වඩා වේගයෙන් වැඩි වෙගෙන යනවා. 7.4%, where the larger banks was 6.9%. This is the Fitch report in 2019 first quarter. However, banking sector profits came under significant pressure from the additional impairment provision. Impairment regulation we discussed කරමු. What does impairment mean? Impairment provisions coupled with increase in tax burden. What is the tax burden? Yeah, debt recovery levy from the implementation new Inland Revenue Act effective on April 2018. And the introduction of debt repayment levy effective from October 2018. Overall banking sector profit declined by 9.1% in 2018 compared to significant growth in 18.9% in 2017. What do we get? Further sector return on equity are likely to remain subdued and unattractive to investors due to capital raising effort made by the bank in meeting and exceeding the capital requirement. So 2020 10-20 billion එකතු කරගන්න තියෙන chances මොනවාද? ඒ ඔක්කොම දැන් deteriorate වෙලා තියෙනයි. එක income එක decline වෙලා තියෙනවා. අනිත් පැත්තෙන් NPL වල වැඩි නිසා unattractive to investors. Share market එක share විකුණ ගන්න බැරි තත්ත්වයකට පත් වෙලා තියෙනවා. What could be the result of this? මොකද මේකේ ප්‍රතිඵල වෙන්නේ? Where a licensed commercial bank or licensed specialized bank has failed to comply with these directions, central banking direction, such LCB or LSB shall not pay dividends. Where a licensed commercial bank or licensed specialized bank has failed to comply with these directions, such LCB or LSP, licensed commercial bank or licensed specialized bank, shall not pay dividends or repatriate profits. Foreign banks repatriate profit or adopt any other measure that will further deteriorate the capital of such LCB or LSP until such compliance is effected and confirmed by the Director of Banking Supervision. Hari, let me explain currently. Restrictions in terms of asset growth and branch expansion will be imposed on LCBs and LSPs which are non-compliant with the above directions. मैं केलिमा गत्ता direction में direction दिले ने काउदा Dr. Njidis Kumaraswamy, Chairman of the Monetary Board and Governor of the Central Bank. This circular game man copy kara pallada. Right, let's see what is this. Central Bank directions given by 2020, all the licensed commercial banks have to increase their equity capital up to 20 billion, while the specialized banks has to increase their equity to 5 billion, from 2.5 billion to 5 billion. 2018, time given 2 years till 2020 December. By 2020 December, any bank failed to comply with these directions. පළවෙනි එක තමයි shall not pay dividends. මේ capital target එක meet කරේ නැත්නම් dividends ගෙවන්න බෑ. Even what will happen? Definitely, shareholders will try to sell off their shares and entire industry will collapse. අපිට තියෙන threats මේව තමයි දැන්. Right? Adopt any other measure that will further deteriorate capital. Adopt any other measure that will further deteriorate the capital. මොනවාද? Capital එක profit එක අඩු වෙන decline වෙන profit එක decline වෙන ඒ retain profit එක අඩු වෙන any action has to be suspended. දැන් උතන තමයි අපිට කියලා වෙන්නේ. මොකද වෙන්නේ අපිට? ඊට කරේ පළවෙනි දා බෝනස් එක ගෙවන්න බැරි වෙයි. Medical benefits නැති වෙයි. අපේ loan facilities ඔක්කොම නැති වෙයි. ඔය අඩු කරයින් නැති. Profit or adopt any other measure. Profit effect any other measure with central bank එක නවත්තනවා. තොර staff එකට පොදු වෙන්නේ. Demotivated වෙන්නේ. Right? Restriction on terms of asset growth and branch expansion will be imposed. Asset growth කියන්නේ තවදුරටත් ණය දීම සීමා කරනවා. And branch expansion will be imposed. Branches අලුතෙන් අරින්න දෙන්නේ නැහැ, අලුතෙන් recruit කරන්න දෙන්නේ නැහැ. Promotion ඔක්කොම නවතිනවා. මොකද profit එකට බාධා වෙන හැමදේම නවත්තන්න. Well, where do we stand? The entire industry is now facing for this difficult situation. I'm one of the victims of this case in 1986. In 1986, when the Basel regulations were implied and the capital adequacy ratio was applied, Bank of Sri Lanka, People's Bank, state banks were far below the capital requirements. So government till not came forward to pump money to these banks. And they were want to privatize these banks. The government want to privatize this bank. Bank of Sri Lanka, People's Bank and NSP. Privatize karana. But in the unions and the staff were against that. Fought for it, and finally got opportunity 3 years time to settle down. So the World Bank put certain conditions on the bank that from that day onwards, 1996 till 1990s, no promotions, no recruitments, no branch opening. No branch opening. The Bank of Sri Lanka, People's Bank in this way. 10 years, they are not got any promotion. I am one of the victims. The similar situation, I don't know whether you can remember. In 2018, if you have noticed, in front of state banks, Bank of Sri Lanka, People's Bank, NSP, there were banners were put. Privatization will take this. ඇයි ඒක ආවේ? ඉතින් සාහටි මේ සර්කුලර් ඉෂුව කරාට පස්සේ and they issued a circular, they put the same conditions. So this was the present position of the industry. So the recovery is very, very crucial. Very, very crucial. Sometimes still we didn't get any, what do you call, directions from central bank, waiting for that. Due to Corona and COVID-19, whether the date, by the final date of 2020 December, will extend it, still not got any idea about that. If we are not extended, we are in the problem. We are facing two types of problem. One is this side, on the other side, economy, the downfall of economy, the banks are facing difficulties. Therefore, I think central bank will consider, will extend. So Corona means it වෙන්න ආටියක් ඉස්සරහට මේක තල්ලු කරගන්න පුළුවන් වෙයි. කාටියක් කල් අපිට අල්ලන් ඉන්න පුළුවන් වෙයි. So therefore, recovery is very, very important. Okay. Now let's go to what's the start with the what is impairment regulation? What is impairment? Now, impairment is effective from 2018. You would have seen because of the impairment, what has happened in the industry, our profit has been declined. What's impairment? Impairment is an accounting principle that describes a permanent reduction of value of company's asset, normally fixed asset. Now, the impairment is coming under IFS, International Financial Regulation. Under that, 9, Sri Lanka also adopted the auditing standard. The impairment has to be implemented. Impairment is accounting principle. It's an accounting principle that any value of an asset, reduction, deterioration, to make a provision for that. Right? Reduction of value of a company's asset, normally fixed asset, then make a provision for that. When testing for impairment, total profit, cash flow, or other benefit that is expected to be generated by a specific asset is periodically compared with the same asset book value. Testing impairment, the total profit, the cash flow, or the benefit that is expected to be generated by a specific asset. But the income should generate it from that asset, periodically compared with the book value. In asset again, generate the income, how much income or the cash flow had to be generated, whether we have received or not. If you have not received that amount, the book value, then we have to make a provision for that for as impairment. Okay, you have got. I'll explain it later with an example. If it's found that the book value of the asset exceeds the cash flow or benefit of the asset, the difference between two written off and the value of the asset declines the company's balance sheet. Book value if the asset value or income has not generated, or asset value reduces than the book value, then the difference has to be written off as a in the balance sheet. Right? අපි මේ උදාහරණයක් අරන් බලමු. පළවෙනි එක තමයි profit decline වෙන එක. Right? Now, when we grant facilities, we charge interest. So average norm of industry average norm is, we say lending rate is 14% or 10%, for example, 10%. Right? Average recovery rate is 10%. But we have not recovered 10%, we have recovered only 9%. So the balance 1% has to be make a provision as a not recovery. That's the number one. Impairment, total profit or cash flow expected by the specific asset, book value. So the asset take a value again. Second, it found that the book value of the asset. And little while ago, I told you about the mortgage properties when we sell. If there's no buyers, bank has to buy. Now, what is the position of that, those assets? We buy at the market value. So the book value is increased. What is the saleable value? Can we sell at the same price? Definitely not. So those assets that we put to market and try to sell, if you cannot sell for that book value less than that, for that different, we have to make a provision. That's called impairment. Okay. Impairment specifically used to describe in reduction of the recoverable amount of fixed asset below its book value. Simple terms is that. Impairment normally occurs when there is a sudden or large decline in the fair value of an asset below its carrying amount or the amount recorded in the company's balance sheet in the books. පොත්වල වටිනාකමට වඩා අඩු වුණොත් asset එකේ value එක ඒකට පුක්කලේ දෙනවා. Now we'll take the second one. Normally occurs when there is a sudden or large decline in the fair value of an asset. Now, our loan portfolio is asset. Our loan portfolio is asset. Okay. If we cannot recover 100%, for example, in our NPA ratio are increasing, we say NPA ratio is 10%, that means for the 10% we have to make provision. The value deterioration. That's called impairment. Okay. Other than the guidelines issued by Central Bank of Sri Lanka, accounting standards IFRS 9 require the banks to impair financial assets. Now, this is the Central Bank guideline issued in regarding impairment. It is the principle applies in accounting standards IFRS 9. Is international requirement under the Basel regulations. Banks have to impair financial assets. Impairment assets is to ensure that the entities' assets are not carried at more than their recoverable amount. Right? Carried not more than their recoverable amount, except for goodwill and certain intangible assets. All others must be impaired. When the carrying amount of assets exceeds its recoverable amount, that asset is impaired. Right? The carrying amount of asset exceeds the recoverable amount, that asset is impaired. Impairment test is to ensure that the assets are carried no more than the recoverable amount and define how the recoverable amount be determined. When analyzing loans and recoverable impairment purpose, individual significant financial assets individually are individual not as significant assets are assets collectively. Right? Right. So that is the condition, what you call principle of impairment. The impairment cost must be included under expenses when the book value of assets exceed the recoverable amount. Impairment assets are diminishing quality, strength amount of value and asset. When the value of the asset, so the recoverable amount is lesser than the book value, we have to make the impairment. Under FAS 9, loan is impaired when the bank will be unable to collect the amount due, including interest and the capital. This is a very important part. Under phase 9, a loan is impaired when it is probable that the bank will unable to collect all amounts due, including both interest and principal, according to the contractual terms of the loan agreement. Loan impairment accounting, the financial circumstances of those borrowers declines are following issues may arise with the accounting treatment. Right? It's called the central bank guidelines on the impairment. Okay. I'll give an example later. Now, what the central bank regulation, the guidelines given regarding the impairment. In terms of Sri Lanka Financial Regulation Standards 9, debt instruments shall pass the SPPI test. Contractual cash flows of means solely payments of principal and interest. SPPI means solely payments of principal and interest. And if so such instruments shall be classified as financial asset at amortized cost. Amortized cost means recovery. Of financial assets at fair value through other comprehensive income based on the outcome of the business model test. Licensed banks are required to maintain standardized process, detailed checklist, and decision trees in order to assess the identify SPVI features, products, and contracts. Right? Okay. Then make the under the I clarify. Mechanical central banking. Practical, we'll take a practical cases, right? What to be, the central bank has not directly given like guidelines how much to impair, what to impair. It is given a very broad classification is given. It's not narrowing down like NPA provisioning, right? Now, this impairment is an accounting term or accounting requirement. It's an accounting requirement under the auditor's requirement, impairment requirement. What's the difference between impairment and the loan loss provisioning? According to these guidelines, loan loss provisioning is a part of the impairment, but it defined differently. Loan loss provisioning is defined as loss incurred or loss occurred. When you make the loan loss provisioning, it is loss occurred. Already loss has been appearing. That's after 90 days, we are classified as an NPA. So NPA is already loss has been incurred. Right? Impairment is you anticipate a loss. Impairment is you anticipate a loss and make a provisioning for that. So that part is not clearly defined in the central bank guidelines. What is anticipated loss? So bankers has to apply this very carefully. What are those, according to these guidelines, earlier we discussed, the assets. Recoverable amount of the asset. Book value and the recoverable amount of asset. Yes, if there's a different, you have to make a provision. According to my classification, according to my personal classification, all the TODs has to make impairment. Why? Those recoverability of the TODs are up to certain percentage is doubtful. Is doubtful. Therefore, we have to make provision for that. Number two, fixed assets. Where we have purchased the customer's assets under mortgages are showing a higher book value. Right? So you can't sell at that price. That certain percentage has to be reduced. If that percentage has to be impaired. Right. So in simple terms, difference between impairment and NPA, we'll go back to, we'll take an example from our financial accounts, customers' financial accounts. When we do the customer financial accounts, we are also making this impairment there also. Right? from the debtors, you make certain percentage as doubtful debt. 5% or 10% of the debtors on the balance sheet appearing, we make a provisioning in the P&L, profit and loss account. That's called doubtful debts. So that's what classifies as impairment in the banking sector. Okay, the doubtful part. Other part is bad debts. What are bad debts? Already incurred loss. So our NPA provisioning is already incurred loss. Anticipated loss where it has not been accounted yet has to be impaired. Okay, now to clarify this one more point we have to will explain for you. Now, when you take the consideration NPA levels, non-performing advances level, so the ratio, NPA ratio, how do we do the NPA ratio? Total assets, that means loans, over NPA into 100. We say, what's the NPA percentage? NPA divided by total loans, total assets, or total loans, and into 100, we say that's a bad debt, what do you call, debtors ratio. Debtors ratio. Now, there's another component which has not been accounted. Right? Now, take into consideration loan installment arrears 1 day to 89 days, where it appears. Loan installment arrears 1 day to 89 days. After 90 days, it is transferred to NPA. 1 to 89 days, where it appears. It shows under regular loans. Still not classified as NPA. So that slab, 1 to 89 days outstanding balance, for that also have to make impairment. That's what the impairment has been affected the bank's profitability. You can see this diagram, this what do you call graph. It is 2018 figure. 2018 figures are given by the KPMG. Bank of Sri Lanka impairment, how much? 8 is 2017 is nearly about 8%. 2018 is over 14% has impaired. So the profit has been declined. The entire industry profit has been declined because the entire amount has been taken into consideration, declined by 9%. Right? People's Bank was 2017 is less than 1%, but 2018 more than nearly 8% has increased by the impairment. Next one is Sale and Bank, HNB. These two are the impairments are very high. Whereas these banks have impairments are very much low. So this is the KPMG report about the impairment in, sorry, it's in the billions, right? So Bank of Sri Lanka is the highest provisioning made, 15 billion rupees minus in the P&L for impairment. Whereas this comes to Ceylon Bank, it's about 11%, 11 billion impairment. So it's all affecting the profitability of the organizations. Right. Okay, so that is the industry position where we stand about the recovery. So we discussed little details about what is What is recovery management? How to define recovery management? What are the components of recovery management? What is remedial management? What is recovery management? Right? Then we discussed Sri Lankan position at the moment in the industry, banking industry, according to Central Bank report, which reports, and KPMG reports, and then some other company, what do you call, PricewaterhouseCoopers, PwC, all these are published. So you can go to the websites. These records can be, you can see downloaded and you can observe, watch. Right? It's available in the websites. Right. Now let's see what is a default, what is a loss defined by the Basel regulations. Under Basel regulation, paragraph 272, in the financial record document, default occurs when there are three instances. It is determined the obligors unlikely to pay debt obligation, principal and interest fees in full. It's a default. A credit loss even associated with any obligation of the obliged, such as charge of specific provision, interest or fees. It can charge off mean legal the documentation, legal charge. That right? Documentation cannot be implemented. That's also a default. Then specific provisioning. Right? Specific provisioning mean after 90 days make provisioning. The default. The obligor is more than 90 days have past due on any credit obligation. Called Basel regulation, above 90 days is considered as a default. The obligor has failed to bankruptcy similar protection from the creditors. If there's a bankruptcy case filed to the for a customer, then it also, that facility also going default. Loss is defined in paragraph 339 of the Basel Code as this should include the discount effect, funding cost, and direct and indirect costs associated with the collecting on the instrument in the determination of loss. Bank should not simply measure the loss recorded in accounting record, though they should be able to compare the two. So loss is what is incurred as loss. Default means given as customer, the obligor, the borrower unable to pay his debt, it's a default. Loss means when unable to pay, it has been directly debited to the account as a loss, it's a loss. That's how the Basel defines. Right. Let's see what is credit risk. Now, these things we have already done, so I'll just remind you. What is credit risk? Credit is most simply defined as a possibility that the borrower or customer will fail to meet the obligation in accordance with agreed terms and conditions. According to the loan agreement, the terms and conditions the customer unable to fulfill, there's a risk. This includes non-repayment of capital and or the interest within the agreed time frame at the agreed rate of interest and agreed currency. Right? As a risk, if it is not paid, not completely not paid, or not paid in the interest or in the time according not paid agreed time frame or due date, all this is making a credit risk. When you look at the credit risk, there are three areas or three components we can see the credit risk. First one is the default risk. Second one is exposure risk. Third one is recovery risk. So credit risk is coming from income from three areas. What is default risk? Simply default risk is customers unable to pay the loan due to deterioration of the income. Customers' income is deteriorated for some reason. If then unable to pay the loan in interest installed on the due date, it's called a default risk. Right? Exposure risk, there are two components. Exposure risk means one is individual exposure, one is collective exposure. In impairment, we discuss this too. What is individual exposure? Right? What is at a given time risk of a facility. At a given time, risk in a facility, what is the risk in a facility? Is the balance outstanding amount. At any given time, the risk of default, the credit risk is the amount outstanding balance and plus the interest outstanding. The second, that is individual risk. Collective exposure risk means risk of the portfolio. Portfolio risk, we call this as sorry, portfolio risk. Portfolio risk means lending to one sector. Lending to one sector is becoming risky. Now, if you look at the lending to agriculture sector, it's a high risk. Right? High risk. So the banks will limit it to risk grant facilities to that sector. That exposure has to be controlled. Till 2010, the entire industry has given to the agriculture sector only less than 5%. But it's priority sector. Therefore, the government decided the exposure should be at least minimum of 10%. It has increased. Similarly, right? Banks have to structure their facility lending portfolio according to the risk and the reward. Right? If the highest reward or the highest incomes coming from the TODs, but you can't expose higher to the TOD because it's a high risk. So that's what exposure risk, portfolio risk, individual risk, exposure risk. Third one is recovery risk. Now we know each and every facility, there's no facility without risk. There's no facility without risk. Do you think that giving a facility against fixed deposit, there's no risk? Giving a facility and cash security, savings accounts, fixed deposit, NRFC account, there's no risk. Still, there's a risk. You may think this is the collateral 100% secured, but there are certain instances when your documentations are weak, you may not be able to recover. Now take the case of if you are taking a fixed deposit against given facility. If the customer dies, how to recover? Because your contract between the customer and the bank has been ceased. So how are you going to recover? Right? When the customer dies, the contract between bank and the customer ceased. So can you apply that contract to do a recovery? Definitely no. So there's a risk. To overcome that risk, we have made another document. What is that document? Is set-off, letter of set-off. That's why we are taking a separate letter of set-off, although the set-off clause is included in the contract. Letter of set-off clause is included in the contract. If the customer dies, the contract ceases. So the letter of set-off cannot be enforced. That's why we are taking a separate set-off to overcome the security. Right? Now, always we take to mitigate the risk in a facility, the credit risk. To mitigate, we have three types of instruments. Either we absorb the risk. We take the risk, bank might take the risk. Secondly, we take an asset to cover the risk. Right? That's a security of collateral. Thirdly, we sell the risk to somebody else. There are issue organization, they undertake the risk. That is something like insurance. So three ways of mitigating risk of the credit risk. Absorbing risk means we take the entire risk into our hand. Now, for example, you are giving a TOD. You are giving a TOD. So you absorb the risk. If you are defaulted, bank has to absorb the risk. Right? Second one is you took a collateral. If they defaulted, you enforce the risk. You cover the risk by the collateral. Thirdly, take an insurance cover. Somebody else will take over your risk. Certain risk, not all the risk. But sometimes you may find the risk mitigating instrument also have a risk. That's called recovery risk. Now, take the case of ideal example. Now, bank has given a facility to a vehicle, motor vehicle. So we take a comprehensive insurance cover. We can, right? Comprehensive insurance cover. That means three parties has to be insured. That is the asset, and the who are users or the riders, and the third party. According to the Motor Traffic Act, you cannot put a vehicle into the road at least third party risk coverage. Under Motor Traffic Act, it's an offense. Right. So banks, we take comprehensive policy. All these three are completed. Comprehensive policy, normally called in the normal term, full insurance. So that motor vehicle, we are taken insurance cover, and installment, the insurance premium have been paid in accordingly, and no problem. So if you are seeing as it is, the risk is mitigated, no risk. This vehicle met with an accident. This vehicle met with an accident. It went off the road and knocked against a wall or a house, damaged the properties, and injured third parties. Right? And this vehicle met the accident. There are a number of risk components incurred. Now, insurance company, they came for investigation, and they investigated the vehicle and found the chassis was twisted. Therefore, they condemned the vehicle beyond repairs. Vehicle was beyond repairs, smashed. So, what's the option we are having? For recovery, insurance claim has to be made and we can recover. So the security is no more value. Therefore, that risk has been shifted to the insurance company. The police came to investigate. Police came to investigate the accident, and they found the driver was fully drunken at the time of accident. Now, what is the position of our security? Collateral. Are we having a valid collateral? Are we have mitigated the risk? No. That's not the credit risk is. Even the recovery, collateral also having a risk. Right? So if you have violated the conditions in the insurance policy, you have a risk. So how to overcome that? How to mitigate that risk? That's why for all movables, we take two guarantors. All movables, we take two guarantors to overcome that risk. So mitigate the risk. Okay, right. So let's go for next session. Next one. What are the importance of lending, why we should go for lending, certain impact on non-performing, we less discussed. Okay, shall we have a break? Shall we have a break?
Okay.
Okay, now 15 minutes time, we'll back. Okay? External funds, capital, loans and deposits are external funds, borrowing from outside. The other two are recovery and retained profits are internal source of lending. When you recover, the recovered amount we can put back again to lending. So this is how we do the business. It will expand. Also retained profits available for lending. So out of these first three are external source of funding and the other two are internal source of funding. Recovery and retained profits are internal source of funding. Capital, we have to pay dividends. Loans, we have to pay interest. Depositors, also we have to pay interest. So therefore, it's just costly funds. First three are externally mobilized. Those are costly funds. The recovery and retained profits are internally generated and it is zero cost. That's a zero cost. So it's more important for lending is not external borrowing, but the internal recovery. Whatever recovery you can lend back. It's a cycling process. More you recover, your cycle will be moved very smoothly. The more you recover, your profits will increase. When your profits increase, your retained profits will increase. So that's how the business is moving on. So therefore, recovery is very important for lending process. It's a source of funds. Recovery is another source of funds. Next important fact is the non-performing advances will affect the companies, the banks' profits. It's profit deterioration. We have profit deterioration due to capital write-offs, interest waivers, and provisioning. Capital write-off means once we find that the recovery is not possible, then we cannot keep the assets in the account, we have to write it off. When you write it off, it will debit our PNL. Then some customers may ask for certain concession, so we may give interest waivers. If you give interest waivers, our income will be deteriorated. So profit will deteriorate. Other one is provisioning. NPA provisioning, non-performing asset provisioning. NPA provisioning is a statutory requirement, right? It comes under Central Bank Regulation, Direction number 3 and 4 of 2008, of Banking number 3 issued under Banking Act. This all the directions are given by the Central Bank, issued on two Act, one is Banking Act of 30 of 1980, Section 46. So that is becoming statutory directions. This is some sort of a legal issues. Classification is done regarding the loans of advances, income recognition and provisioning. This guideline gives in 2008. The classification still is invalid, not changed yet. So we have to classify all the facilities in two groups: performing advances, non-performing advances. Performing advances and non-performing advances, which are in operation section are performing advances. Non-operating section is non-performing advances. Classifying the non-performing advances in basically two factors we are taking into consideration. One is the period on arrears, how long the outstanding period. Secondly, potential risk. What is the risk in component? We discussed earlier, credit risk. Under the credit risk, what is the potential risk? So under the Basel regulations, potential risk means net realizable value of securities. That means no outstanding balance, minus collateral, and we take the risk. If the collateral value is more than the loan value, then there's no risk. Potential risk is zero. Collateral value is less than the loan value, then there's a risk. So that amount we have to call potential risk. At a given time, that's a risk. So that's a central bank classification according to Basel regulations. Right. There are certain other information, important things are there in making provisioning. This direction comes under direction number 6 of 2009, which gives this one. Bank shall classify all credit facilities extended to a borrower as NPL when one or more credit facilities have been classified as NPL in terms of direction 3.5 and the aggregate amount outstanding of such NPL exceed 30% of the total credit facilities extended to such borrower. What does it mean? Right? There are a number of facilities granted for one customer. One customer borrowed number of facilities. One facility went to NPL. Other facilities are not in the regular section. The amount, the amount into the NPL, non-performing advances, is 30% of the all credit facilities, more than 30% on the total credit facilities outstanding balance. Then the entire all the credit facilities has to be transferred to NPA. Take into consideration that example, if a customer having a housing loan and a business loan, right? He had taken housing loan, business loan, and certain other facilities. We have taken certain 2 or 3 facilities. All other facilities are performing well, whereas the business facility, taken to a business facility, business has been defaulted. So the outstanding balance of that defaulted facility is more than 30% of total credit facilities, then all the loans has to be transferred to NPA. Even the housing loan or other loan, all the loans which are in the regular section has to be transferred to NPA. That's a direction given by the central bank line is applicable of 1st of January 2011. You see, banks are required to comply with direction commencing from 1st January 2011. Now, there's a small hitch here. Banks are required. What does it mean? Banks are required. It is not specified by the central bank what is banks are required mean. Normally, we should consider as banks are required mean if all the banks has to follow this regulation. If one customer having loans in different banks, one customer having loans at different banks, facilities at different banks, if one facility has been defaulted, right? So that defaulted amount more than 30% of all the facilities, then the other banks also has to transfer those facilities to NPA. This is 2011. The central bank audit team will come and check these things, right? So how to find out this? How to find out the other bank's position? You know only my bank position only. How to find out other banks? That's why quarterly crib report has to be updated. Quarterly crib report has to be updated. Then you will find borrowing from the other banks. Then if the borrowings, total borrowings, and the house, what is NPA amount is more than that, you have to transfer. Any other bank has to transfer to NPA, then you have to transfer your facility also in the NPA. Since 2011, this has been implemented. With regarding this one, I have not given to you here, which is something very important. In India, 2019, there's a special act have passed. This was specifically clearly mentioned. In India, 2018, there was a central bank guideline regulation act was passed and it was going to central bank that any facility over 500 million, that is 50 crores, 500 million, large facilities, if transferred NPA means if the first installment in arrears, it has to be transferred NPA. Not 3 installments, first installment. And their classification different, 3 classifications given. 1 to 30 days, 1 classification. 31 to 60 days, 1 classification. 61 to 90 days, 1 classification. And 90 and above are NPA. So these 3 also considered as NPA. Right? Less than 90 days, 3 categories according to Indian scenario. Then, with regarding to the servicing of such facilities, the same thing what we discussed now is applicable in India. Is specifically mentioned. If one facility is transferred to NPA, right? On the first installment is falling arrears, all other banks has to transfer their facilities to NPA. There's no limitation of 30% or 10%, whatever it is. Entire amount has to be. If one facility transferred NPA, a customer you have borrowed over 500 million, 1% transferred to NPA, all the banks has to transfer all the facilities to NPA. Further, within 1 month, all the bank has to get together and draw out a plan to recover the facility. All the bank has to get together and draw out the plan collectively. This is the Central Bank of India, Reserve Bank of India issue for the Indian banks. In that case, we are lucky, cannot go to that extent. But anyway, Central Bank has given this direction, so we had to follow these directions. Now, what the impact of this, what I said? The principle behind this is default of one bank cannot be good to other banks. Default of one bank it should not be good customer to other banks. That's a interpretation of these regulations. So we have to take into consideration that also. Right. Now, according to central bank regulations, we have to classify the credit facilities, not NPA facilities. Credit facility 2 groups, he said. Performing advances, non-performing advances. Non-performing advances, again, we have to classify into 4 groups. NPA categories for credit facilities. Specially mentioned category, where arrears 3 installment to 6 installment or 3 to 6 months. Substandard category 6 to 12 months. Doubtful category over 12 months up to 18, and loss category over 18 months. Again, specially mentioned category 3 to 6 months. In the case of overdrafts, it is 90 to 180 days. Substandard categories 6 to 12 months. For overdrafts 180 to 365 days. Doubtful category 12 months to 18 months. That means 365 days to 540 days. Loss category over 18 months. That means for overdraft over 540 days. So we have to classify the facility that manner. Now, platform we are not doing manually. All these things have been automated. System will automatically transfer to the relevant categories. In the case of credit cards, special mention category 9 to 120 days. It is not 180 days. 120 days. Substandard category 180 to 120 to 180 days. Doubtful category 180 to 240 days. Loss category over 240 days. That is within 9 months. In credit cards are transferred into NPA section, loss category. So this is for the credit card facilities. Right. Next is one, according to the provisioning regulation, there are two types of provisioning. One is regular, general provisioning, other one is specific provisioning. General provisioning, specific provisioning. General provisioning, regular facilities, and which are in specially mentioned categories. 0.5% has to be made as a provisioned P&L, profit and loss account. Right? In addition to impairment, right? We discussed earlier impairment, which is not falling in this category. This is straight away loan loss provisioning. Impairment is expected losses. Now it is incurred losses, which is transferred NPA. Right? Regular, special mention category 0.5%. The specific provisioning, substandard category, credit card 25%, loans and overdrafts 20%. Right? Doubtful category 50%, loss category 100%. So you have to make provisioning in this manner, answer into making we have to make provisioning on the P&L. Right? That the regular and special mention 5%, 0.5%, substandard category 25%, credit cards, others 20%. Doubtful category 50%, and loss category 100%. Right. Again, regarding this provisioning, there's something called haircut ruling. Central Bank implemented, and what you call haircut ruling. Now, why this haircut ruling came earlier, there was no restriction about this classification of loan, what you call net provisioning amount, right? So whenever there's a property mortgage, most of the banks consider it fully secured, right? So we discussed earlier slide regarding the classification. Potential risk. The potential risk is outstanding balance minus collateral value. So in the case of housing loans, earlier, property mortgages are taken, banks considered it is fully secured, therefore provisioning is not necessary. Why? It is always the security value is more than the loan value, therefore no need of making provisioning. Right? Now, once it is to do that, what happened? Central Bank has been observing this for some time. So banks are paying dividends, whereas they are not paid provisioning. So the profit has been increased due to non-provisioning of NPA. Their profit has been increased. From that profit, they are paying dividends. In other words, they have been paying dividends from the NPA, non-performing advances. Right? Central Bank observed this and implemented this case in haircut ruling since 2011. What is haircut ruling? For haircut ruling, the value of security. What is the value of security? Has to be considered as post-sale value of immovable property can be counted as a value of security. What is the post-sale value of a property? Right? Now, Central Bank and haircut ruling, number of years in loss category, percentage of post-sale value. First provisioning is 75% of the post-sale value. That means you cannot take the 100% of the security value as what you call to get the potential risk. Only 75% of the immovable property can be counted as value of security. Right? Whereas in the when you transfer NPA section, first provisioning up to transfer loss category. After transfer loss category, second year, we can take only consider only 60% of the post sale value. Likewise, third year 50%, fourth year 40%. Likewise, it will gradually decrease. After 4 years, normally asset value will be 0. But is there any increase in the value, market value? Bank have given option, managers have given option to make adjustment accordingly. After 4 years, there's no security value. Security value, collateral value is 0. But banks are given opportunity for increase the do a revaluation if the valuation has been increased. So that's the provisioning classification. Okay. Now, with regarding this, before we go for the workshop, under direction number 3 and 4 of 2008, income recognition, there are certain other changes have been implemented. In respect of credit facilities granted against residential property, which is occupied by the borrower for residential purposes, the valuation report is not more than 4 years old. Now, these are recognizable, these given the valuation report. But the valuation report, how long it is valid? For residential properties where the borrower resides, valuation should be done every 4 years. All other credit facilities report is not more than 3 years old. Valuation report should not be more than 3 years old, where the residential properties where borrower not occupies, and all other commercial properties only 3 years. Right? So valuation report valid only 3 years for all other categories except for residential properties where borrower resides. When the borrower resides in a residential property, valuation should be taken every 4 years. Okay. Then revaluation of immovable property as referred in directions 131B and C are above shall made annually depending on any significant and volatile changes in the fair value of such immovable property, RSP. Right? If there's a big fluctuation in the valuation of the property market, customers are allowed to do a revaluation annually. If not, once in 3 years, we can do the revaluation. So that's the value of the valuation report. It's very important because to work out your potential risk, it has to be valued, the market value, how much you can sell. Right? Then, with regard to the finance companies, the provisioning about finance companies, direction number 3 of 2006 are given. Every finance company shall make provision for accommodation classified as non-performing, and amount of such provision shall be at least be aggregate of 50% of all accommodation in arrears period 6 months or more, but less than not exceeding 12 months. 100% for all accommodation over 12 months. For finance companies, the classification is over 6 months, up to 12, 50%, 12 and above, 100%. Only 2 classifications. Right. Let's go for that workshop and see. Now, how to work out the loan loss provisioning calculation, how to do that. Okay, right. I need your support. I have given you the facilities and loan loss provisioning slides. What you have to do is, you will do it with the calculations, how to make the provisioning, right? Right. Take this one. The first scenario. Are you with me? Hello? Are you with me?
Yes.
Okay, fine. Facility is secured by a personal guarantee, right? When you transfer NPA, how to make the provisioning? Original amount granted 1 million, securities guarantors. When the guarantors are considered, we are not considering as a what you call value is nil. Enforcing value is nil. When the guarantors are taken, it is only one nominal, only namesake. When you want to enforcing, very difficult to enforce the guarantors. Therefore, normally consider guarantors are no security value. Value of security is nil. Okay. Then installment in arrears, 8 installment in arrears. Present outstanding balance 850,000. Right. Now, what is the loan? The NPA category? 8 installment in arrears. That is more than 3, less than 12. It is substandard category. Now you can enter in that first column that in the worksheet I have given you. There are 4 columns I have given to go one by one. You can go on the same directions, right? Then specific NPA category is substandard. You can write down that. Realizable value of security is 3. It is nil. Because guarantors we got security is nil. Then next one is exposure. Exposure means outstanding 5 minus 3. 5 minus 3. Exposure is 5 minus 3. That is outstanding balance minus value of security. So there's no security, therefore the exposure is 100%, 850,000. Okay. Then loan loss provisioning is for substandard categories. How much? 20%. Substandard category provisioning is 20%. How much? 20% on 850 is 1,70,000. Outstanding balance 850,000. Out of the loan loss provisioning has to be 170,000 if it is in the substandard category. Next scenario is, on the next column you can enter, that is 14 installment in arrears. Is 8, next one is 14. All top, all are same, so change. Okay. 14 installment in arrears, present outstanding 850,000. Now, what is the NPA category? 14 means about 12. It is doubtful. It is doubtful category. The realizable security is nil. Exposure is same, 850. Now, what is the loan loss provisioning? Doubtful, 50%. Doubtful category, 50%. That is 4,25,000. You have to make provisioning. Right? Next scenario, 21 installment in arrears. Same personal guarantee. 21 installment, that is over 18. Now NPA category, loss category. Okay, loss category. Realizable value of security nil. Exposure is same 850. The provisioning, loan loss provisioning is now 100%. You can write in front, it is 100%. So substandard category 20%, doubtful 50, loss category 100% on the exposure. On the exposure, not on the outstanding balance. Okay, so that's the first category, the first one, personal guarantee. Let's go for the next scenario, secured by a movable property. Amount granted is 5 million. Security, machinery, and guarantors. Value of security 1.2 million. Number of installments 7. Present outstanding 8 lakh 4.2 million. Looking at these figures, we get any confusion. Normally, security value should be more than the loan amount, no? Always security value should be more than the loan value. If in the case of machinery, it should be double the loan value. Should be double the loan value. But what happened here? The value of security is 1.2 million. Installment area 7. That means within 7 months, the security value has been deteriorated or declined. Can it happen? Can it happen? No. There can't be any depreciation because only 7 months have passed. What can happen? There are instances where what you call technical obsolescence. In the case of machinery, there are technical obsolescences. That means the machinery technically getting obsolescence within a shorter period. Now, for example, take your mobile phone, right? Now, if your mobile phone or smartphones have come to the market, and the earlier versions have been now redundant. Therefore, no value for those. Similarly, for machinery, the same thing happened. I can give an example for this case. It happened sometime. First, what is the technical obsolescence? We have granted a facility to Teas, that is conglomerate, very large company, where they have a unit called tea packaging. They did at Panipite, they had a factory. What they do, they bring tea and manufacture tea bags for export market as well as for the local clients. There are people who buy clients and do for local market people also tea bag packaging. This was happened in we had that SMI 4 scheme was introduced by the Asian Development Bank. Under the conditions and the operating instruction from the ADB, the loan was granted. They obtained a loan to purchase 14 tea machines to pack tea bags. Under the loan scheme, they bought 14 machines to pack tea bags. Now, under that ADB scheme, loan has to be given for 5 years. So we are granted the facility for 5 years. And the machine capacity was, right? Machine capacity was 120 tea bags per minute. That capacity was 120 tea bags per minute. 14 machines were bought under the loan scheme. And this loan was operating very well, nearly about 2 years. After 2 years, suddenly they stopped doing the repayment. Suddenly they stopped the repayment. Then when we went to investigate what has happened, we found all 14 machines are put inside the room and locked. They are not operating at those machines. So all 14 machines cannot be getting damage or non-working condition within at once. Impossible, no? So we spoke to the factory manager, what's the reason for not using those machines. Then he gave the reason. Their competitor, George Stewart's company, their competitor, they also do tea bag packaging. They have bought a new machine with a new technology, highly developed technology, which can manufacture 400 tea bags per minute. Which can manufacture 400 tea bags per minute. So what has happened? The cost of production of this syrup trading has been increased, therefore they lost the market. They lost the market. So no more in operation, therefore they closed down that unit and put the machine on site. Now what's the position of the bank? Now we had to find a way of recovery. So we went for an interview with the board of directors with the company to negotiate for recovery. There is two simple questions they ask. The director legal asks, these machines are mortgaged to a bank? Yes. Then this belongs to you, no? Yes. Then take it and go. We don't want. Simply as that. We don't want these machines. These are your machines. You can take it and go. Now, what are you going to do with those machines? Those are mortgaged to banks, so we can seize. Okay. After seizing, to whom we are going to sell? We'll find a buyer. So what happened? We took the machines out and kept in our stores and tried to dispose it. There's no buyers because that machines were outdated, technically obsolete. So we went to Hettigori Industries, Siddhalepa Damartya, and asked whether we can give these machines for their Siddhalepa manufacturing. Pay our manufacturer, they said, no, not we don't want that. Ultimately, after some time, we found a buyer, Eastwaram Brothers. They agreed to buy at the rate of 20 rupees a kilogram as scrap iron. This is the situation. So what the learning point of this story? This is not a story actually, it's a case. What do you learned? Very important principle. What do you learn? Whenever going for machinery, when you are lending against machinery, mortgaging the machinery and granting a facility, it should not go more than 3 years. Although 5 years category, all other factors are given, it should not go more than 3 years. Why? In a shorter period, we try to recover, it can be technically getting obsolete. There are certain items, certain productions are out of production now. No cameras, no razor blades. Out of production. Nobody's buying, nobody's manufacturing. So those who have having a stock has to keep the stock. And the film rolls, there's no market for those. Those are technically obsolete, getting obsolete. Okay, now let's go for the case, back to the case. Original amount granted 5 million, value of security 1.2 million, 7 installment arrears, present outstanding 4.2 million. Okay. Right, what's the NPA category? What's the NPA category? It's substandard category. Substandard category. What is the realizable value of security? Only 1.2 million. 1.2 million realizable value of security. Now, what is the exposure? Present outstanding 4.2 million. Security value is 1.2 million. So exposure is 3 million. 4.2 minus 1.2, it is 3 million. Now provisioning is how much? Substandard category 20%. That is 6 lakhs. Right? 6 lakhs loan loss provision. What is the next scenario? 13 installment in arrears. You can go to the next column. You can enter in the next column. What's the NPA category? Now it's doubtful. Realizable value is equal to same. Exposure is same. What's the loan loss provisioning? 1.5 million. 50% of the exposure, 1.5 million. Next scenario, 13 installment in arrears. Sorry, 19 installment in arrears. There is more than 18 installment. Category loss. Realizable value of security, 1.2 million. Exposure is 3 million. So provision is 100%. 3 million provision has to be made. Okay. Right, next scenario, facility is secured by immovable property mortgage. Right, amount granted 750,000. Security is immovable property. Post sale value of the security 1 million. Installment in arrears 7. Present outstanding 850. What has happened? Original amount granted 750, present outstanding 850,000. Why is that? Can it happen? Bank has, no single installment has been paid by this customer, and what the bank has done was loan installment has been recovered through the capital amount. That means interest has been capitalized. Interest has been capitalized. So that's why present outstanding balance has gone increased to 850. Now this, keep in mind there's a problem here. What's the problem? All the documentation you have got mortgage bond for 750,000. So present outstanding it is 850. So if we're going to recover, there will be a problem for us to recover because it is not secured. It is not secured. Okay, so therefore be careful. We are not now allowing to capitalize the interest for recovery. Those allowed in those cases, now it's not allowed. Right. What is NPA category? Substandard. The counted realizable value of security is how much? How much? 75% of the for sale value. It is 75% of the for sale value. Then what is the exposure? Outstanding 850, secured 750,000, only 100,000 is exposure. Provision is 20%. Provision is 20%. Right, next scenario, 13 installment in arrears. NPA category doubtful. Counter realizable security is 750,000. Exposure is 100,000. Now what is the loan loss provision? It is 50,000. Let me 50%. 50% of the exposure is made provisioning. Next scenario, 19 installment in arrears. That is over 18 months. NPA category lost first year. Security value is 750,000. Exposure 100,000. So the provisioning is 100%. Okay, up to this point, it goes the normal way, normal recovery, normal provisioning way. All other types of collateral, the same procedure is followed. Now changing from here onward after second year. Go to next scenario, 31 installment arrears. Right? NPA category, loss is second year. Now very carefully understand, second year means not 24 months. It is not 24 months, it's 30 months. Why? Transfer into loss category after 18 months. From there, after 1 year. That means 18 and 12 months is 30 months. After 30 months only, second year starts. Okay? It is not the 24th month. Second is not the 24th month. Be careful about when you do calculation with examinations. Mostly they may misunderstand this second year. Second year is mean after transferring to NPA, the loss category, 1 year. That is 18 months loss category and another 12 installment, 12 months, 30 months. That is 31 installment arrears. This is the second year. Now counter realizable value security is 60% on the second year. It is 60% realizable value. So exposure is increased to 250,000. Provision is 100% now. Now in the loss category now, provision is 100%. Right. Next scenario, 43 installment in arrears. 43 installment in arrears. NPA category loss third year. Right. Count security value is 500,000, 50% of the wholesale value. 50% of the wholesale value only allowed. Exposure is increased to 350,000. So provision is 100%. Now you see gradually exposure is getting reduced. Next scenario, 55 installment in arrears. NPA category, fourth year. Now 40% of the wholesale value, realizable security. Exposure is 150,000. 850 minus 4 lakh, 850 minus 4 lakh, 450. Loan loss provision is 450,000. Okay. Final, 99 installment in arrears. 99 installment in arrears. Now NPA category, over 4 years. Counter realizable value security nil. After 4 years, it is nil. Or if there's a revaluation of asset under management discretion. If it has a revaluation, you can do the adjustment with that your discretion, management discretion. So exposure is 850, provision is 850. Full amount has to be made as provisioning. Okay. Right. So that's how we make the provisioning for bad debts, provisioning. Effect on pricing, there are two ways of doing calculation. One is CD ratio, that is credit deposit ratio method. Other one is cost of fund method. CD ratio method means normally done by the specialized banks as well as finance companies apply the CD ratio method. You mobilize deposits. And out of that deposits, a certain percentage only you can lend. You can't go for 100%. Whatever mobilized amount, certain percentage only you can lend. 20% you have to keep a strategic reserve. Strategic reserve is 20%. Then About 5% you have to have what you call till money, cash in hand. Then you have to make a provisioning for what you call risk allowance. So normally 65% only you can lend out of your deposits, right? So you mobilize 1 million deposits, you say at the rate of 10%. At the 10%, you mobilize the deposit. End of the month, year, you have to pay to the customer 100,000 interest. Now you have to earn this 100,000 interest from 65% of the deposit. That is 650,000. Right? So you have to earn 100,000 out of 65,000. You calculate and see what is the interest ratio. So for that, you have to plus your profit margin. Then that's how the pricing of finance companies and specialized banks. Right? That's called CD ratio method. Other one is cost of fund method. Cost of fund method means we work out cost of funds. What is the financial cost? There are two types of cost of funds. One is financial cost of funds. Second one is administrative cost of funds. Financial cost of fund means you can calculate in your own branches. Interest paid, total interest paid, divided by total deposits. Interest paid divided by total deposit into 100. You can now check up and see your branch or your bank, either other banks, compare see how much financial cost. The factors affecting the financial cost of fund is the deposit mix. Factors affecting the cost of fund is the deposit mix. Any bank having high amount of demand deposits, their cost of funds are very low because demand deposits are zero interest. Any banks having term deposits are higher than the demand deposits, that bank have a higher cost of funds. Cost of financial cost of funds. So therefore, as normally banks has to keep a what do you call a deposit mix in a prudent manner. Normally 40 demand deposits, 30 savings deposits, and 20 term deposits may be ideal. But it's very difficult to keep your demand deposit in such level because the current account customers are they are not keeping money in the account because they are not getting any benefit. So therefore, it is the deposit mix is a crucial point for deciding financial cost of fund. Now, if you take now state banks, their cost of funds are low because they have high demand deposit balance because the government deposits. The other banks, you have mobilize a deposit. You are trying to increase the fixed deposit interest to mobilize deposit. So your cost of fund gradually increasing. Right? Okay. Next component is administrative cost of funds. Administrative cost of fund is one is non-interest expenditure, that is salaries, other expenses in the P&L, profit and loss account. Right? Non-interest. Then capital write-offs, interest waivers, and provisioning. Now these are other expenses. It is also appear in the profit and loss account as expenditure. Capital write-offs, provisioning for NPA, bad debt write-off, everything is debited to P&L. So it is part of the cost, part of the administrative cost. Now total cost of fund is financial cost of funds plus administrative cost of funds. If you see the daily news, every month, last Friday of the daily news, you may find this bank sector, what is the cost of funds? AWLR, AWPR, all these things are appearing. So you can find out industry, what is the industry norm. Then you can compare with your own bank or your own branch, what is your position. Right. Now, what is the impact on the non-performance pricing policy is how to do the pricing. Right. We say total cost of funds, financial cost, administrative cost of funds. Both we add together. If you see work out, what is the cost? We say cost of funds is about 10%. Cost of fund is 10%, for example. Then you have to make an allowance for that and certain percentage for your profit margin, or we call the risk margin, 3%. Then you have to lend at 13%, you are in the break even. If you lend at 13%, you are break even. No loss, no profit, no gain, no loss. Right? But your recoveries are not 100%. Your recoveries are not 100%. Now, if you look at the percentage situation, is nearly about recorded rate is 6.5%. That means nearly coming to closer to 10% once again. Sometime back we had larger NPA ratios. So your non-infected ratio, so the infected ratio is about 10%. Therefore, your recovery is 90%. So whatever you can generate income is 90% only. So you make that position. That means now 13% interest divided by 90 into 100. That is about 15.5% interest. If you grant at that level, for example, 15.5% or 16%, right? You are safe side. But problem is, who are the customers going to borrow in at that price? For example, you are giving for deposits 6%, 7%, 8%. If you are going to charge 15% the customer will always fight with you. Therefore, the pricing policies have a big effect on us. Right. Now, who is paying that 15%? For example, we took the 15% or 15.5%. Who pays that 15.5% interest? Our good customers, regular customers. The loan customers who have borrowed paying 15% are good customers. Right? The defaulters are not paying now. Only good customers are paying. What we had done that? How? Why they pay 15%? Why they 15%? Because our cost included the provisioning for NPA also. Write-offs also included as a cost. Our capital write-offs and provisioning for NPA, bad loans also, we added to our cost. Therefore, cost has increased. Now we are charging that cost from the regular customers. දැනගත මොකද එන්නේ? පිටි ගන්න එන්නේ නේද? පාර යන්න තම්බෙන්නේ. Because we according to transfer pricing, because transfer pricing policy system. ඒ කියන්නේ principle එක transfer pricing. We transfer the cost to somebody else. ඒ transfer කරා regular customer. Now regular customers තමයි අපේ NPA එකට ගෙවන්නේ. ඉතින් අපි press conference කියලා කියනවා අපේ management top management එක we earned so much of billion profits. NPA කොයි තියෙන්නේ? NPA add කරලා cost එකට. Okay. ඊළඟට බලමු ඊළඟ effect එක මොකක්ද කියලා. Next effect. අපේ current account portfolio we have taken a current account portfolio. 70% of the 65 to 70% of our customers are business customers. If you take the current account portfolio, any bank, 65 to 75%. Sometimes it can be more than that. 65 to 70% in average are business customers. When they borrow, what will they do? When they borrow, what will they do? They add this financial cost to their products and services. They add this financial cost to products and services. Now, who pays this? Our NPA. The consumers. You and I. The total consumers will pay for that, this price. So what will happen when we charge a high interest rate on the business customers? They add that to the services, products and services. Then what will happen? Price index will go up. Yeah. Next step is the inflation is increasing. So now we are partly responsible for increase of this inflation in the country. Once, I think I can remember in 2003 or 2004, 2002 or 2003, in the World Bank report, IMF report, World Bank report, it was commented about Sri Lanka. At that time, we had an inflation of 16%. Inflation was 16%, peak of the war at that time. So, World Bank report has been commented about the cost of this inflation, two-digit inflation. This two-digit inflation due to the inefficient banking system in Sri Lanka. That's how the World Bank have commended us. Can you remember in 2004, Mahinda Rajapaksa forcibly reduced interest rate from 20%, 18% to 12%. Why? It is affecting the economy. It is increasing the inflation. Price index is going up. So it has a big effect. So ultimately, if you work out calculation, due to our pricing system, because if the NPS are increasing, it has a bad impact on the country's economy. So it is becoming a national issue. Our NPA is becoming a national issue for the country. This recovery is very important. Internally, we have problems. Non-recovery have externally we have problems. Non-recovery have an effect on our personal career also sometimes. So what is the direct impact of this problem? We discussed this a little earlier. Financial institutions hold land and properties and other collateral of the businesses that have failed to service their debt regularly, and value of such collateral would be probably exceed 100 billion or US sometime by 2008 the figure what we had parent, right? Properties are again a non-performing section, non-productive assets over 100 billion rupees. These resources are not utilized to create and foster growth in the economy. So it has a direct impact on our economy, our non-performance. This sometime back, long time back, this happened. I wanted to erase it, but there's a big learning point in this. This happened in 2006. HSBC Sri Lanka's asset base weak in 2007. HSBC Sri Lanka's asset base, though strong by Sri Lankan standard, weakened in the last years due to increase in delinquencies on credit card advances, residential housing loans, loans to medium-sized corporate sector. Now, HSBC has in 2006 failed in these three areas, lending to these three areas: credit card advances, residential housing loans, and loans to small corporate sector. What has happened? HSBC. HSBC clientele base was a certain clientele they were servicing. In 2005, 2006, they wanted to come down bring to the bottom level and go to the retail market. Credit card, residential housing loan, and small businesses come to the retail market and expand their businesses. So what has happened? They failed. Can you believe HSBC? The credit card business in the credit, they failed because they can't say sold. They distribute the credit card in a haphazard manner without evaluating the creditability of the customers. Even now, some banks are doing that. Yeah, even I can remember when I was working in Nigambu, in a passing Vattal area, like, can I put canopies like Etisalat and other mobile telecom card they are selling? Hutch card, then you can, then. Credit card with HSBC. What the result? In 2006, the highest default rate in credit card business was HSBC. In the face of unfavorable macroeconomic environment, the bank has since tightened their credit card underwriting standards in consumer banking, and credit cards in particular increased focus on the collections recoveries that are part of the finances. So I switched rating Sunday Financial Times, 10th August 2008 was in publishing newspapers. It was in the Sunday Times. So what is the learning point in this? Even the credit card business is a lending decision has to be taken. See whether the customer has a repayable ability. I have some examples, cases with me, but I will have time to discuss that then. Therefore, keep in mind, even credit card is a credit decision. Okay, so we have to consider as a lending decision. Right, who is responsible for default? Who is responsible for default? Customer or the bank? Always banker sees customer is wrong. We had a research in 2006. Central Bank has done a research taking about 1,000 defaulters from all the banks and had a research to find out the causes for default. Why the customers had default. We found 68% of the default due to the bank's fault, not the customer. We put the customer in trouble. So-called willful defaulters. You always see Uru customers. So-called willful defaulters are less than 5%. So we individually interviewed each and these customers to find out the exact reason why they defaulted. Although they have the capacity, ability to repay, and they are not repaying. Why? There should be something wrong somewhere. In the research, what we found was, from their own words, from their customers' words, Mahathyo, loan එක ගන්න ගිය වෙලාව මට දුන්නු වදේට මම දැන් දෙන මගේ පස්සෙන් ඉන්නේ. මම ගෙවන්නේ නැහැ. පුළුවන් නම් මට උත්සාහ විතරයි කරගන්න කියන්නේ. This was the customer's case. Gospel truth. They had a bitter experience in borrowing from the banks. The harassment given by the banks at the time of granting the facility. Now, what are the reasons we found in the 68%? The bank, they are granted the facility to the wrong person, not identify the customer or the customer needs. We are not granted the facility in the time the customer needed the funds. And we are not granted the amount that the customer wanted. And we are granted the period in the wrong period. That means the customer's ability to cannot be paid. These are some of the reasons. Very vital. Who the wrong person mean? Even now it's happening. Even now it's happening. We did the research in 2006. Don't you agree with me? Now your management wanted you to increase your portfolio. The management wanted you to increase your portfolio. What do? Find somebody to grant a facility. කාට හරි ලෝන් එකක් දෙන්න ඕනේ ඉච්චරයි. කවුරු අහලා ගියා පේමන්ට් කාර්යය වගේ. ඒ පේමන්ට් ඉස්සර පේමන්ට් එක බඩුවක් අත තිබ්බොත් පේරෙ එන්න හම්බෙන්නේ කොහොම හරි විකුණනවානේ. ඒ වගේ තමයි බැංකර්ස්ලා. කවුරු ඇවිල්ලා මොකක් හරි ගැන අහුවද කොහොම හරි ලෝන් එක දෙන්නයි බලන්නේ. ඇයි ටාගට් එක අචීව් කරන්න. There's another nice thing happening. I have researched something about the banking sector, what's happening. Now you are given a target. To achieve this target, what will you do? Most of the managers, what they do, the person who pays the loan very well, the person who operates the loan account very carefully and pays the loan very well. හොඳට given එක බලලා loan එක top up කරන්නේ. Loan එක top up කරගෙන යන customer the need or not, you pop up the loan. Ultimately what happened? උට ගෙවා ගන්න බැරි නම් top up කරනවා. Okay? So not identify the person properly. Who is the customer need to identify? I don't know. I given this the need-based finance. Customer need to identify. ඒකට customer product එක හදන්න. දෙවෙනි එක wrong timing. Customer ඕන වෙලාවට facility. Keep in mind that all the loan customers are not in advance planning their loan requirement. That is our duty to plan for them. Each and every customer, mostly, they come to us at the last moment. You can so never I will have a damage you. So we are pressurized of giving facilities. Right? Why can't we plan in advance for customers' needs? Can you remember we did cash flow projection? We identify customers' future needs. We plan the customer's future needs. That's what we are doing. Second problem is when the customer comes for a facility, almost always we don't have the delegated authority to handle that customer. So we had to forward a proposal to higher management for approval. That is a problem we are having, the time lag. Wrong time. The other one is wrong amount. Whenever a customer comes, there are certain managers are there. When a customer comes and asks for 1 million, point blank they cut down. Not even analyzing or evaluating his requirement. So ultimately end up with disasters. If the customer asks for 750,000, so 1 million, you give 750,000, balance 2.5 lakhs he'll borrow from the outside money market. in street lenders. So which loan is going to service first? That facility. So දැනම NPL loan එක තමයි දෙන්නේ. අනිත් එක තමයි wrong period. customer capacity එක නැත්තම් ගෙවන්න අපි කරන්නේ amount එක අඩු කරන එක. period එක වැඩි කරලා customer ගේ cash flow එකට balance වෙන්න why can't we adjust that? Increase the period. We always within the framework of delegate authority, 3 years or 5 years, manager delegate authority. Again, we take any now. A could really then in Pitan. So we can. So that's a reason for defaults. So why we worry? Can we relax now? You come that we in the Mura bit. Other 30 meters of us there with the corona and the economic downfall, big problems have come up now. So we had the recoveries, the big target for us now. Okay. Let me finalize with one thing. What are the 5 C's of bad credits? Yeah, I learned about 5 C's of credit, 5 C's of good credit. Character, capacity, collateral, conditions, all these we discussed. Good C's. What are the 5 bad C's? First one is complacency. Complacency means expecting that the past good things in the future as well. First class customer. Loan hatarak katta, top kiwa outstanding velata kiwa suddha wage වැඩ customer. That's your past experience. But don't you think that your granting this facility will recover in the unknown, uncertain future? අනාගතේ කොහොමද කියලා කියන්න පුළුවන්ද අපිට? Customer අමාරුවෙන් තියෙන්නේ complacency. Expecting the good things will happen in the future also. වෙනස් වෙනවා. ඒක කියන්න බෑ. Second is carelessness. Who understand it? Customer understand කරන්නේ නැහැ. Customer proposal understand කරන්නේ නැහැ. External factors understand. Carelessness. කොහොම හරි loan එක දෙන්න figures හදලා දෙන එකයි කරන්නේ. That will lead to bad credit. Next one is communication. එකක් තමයි customer අතර තියෙන communication එක clear නැහැ. But we are not communicating to the customer the terms and conditions, how to operate the loan, when to pay the loan, what are the bank policy, it's not clearly communicated. Of course, we are getting a customer again, offer letter of terms and conditions of course, yes. Who reads that? How they care? Customer read karada, bank will read karada. So it has to be communicated. Before signing the executive documents, communicate, tell the customer what is the position of the loan, how to pay the loan, that all these things can be informed the customer. Right. Next one is the contingencies. We are not taking into consideration what can happen in the future. Whoever expected the corona to shut down the entire world, operations, who expected that? Still we are looking for the contingencies. Anything happen can happen. So for a business, as a bank, we have to take into consideration contingencies. It can happen. Anything may happen. Or might happen or might not happen. So we have to plan for it. Finally, the competition. We are working in 26 banks, 3,985 branches, island-wide. That's competitive. That's banking sector. Then insurance companies, Salasa, finance companies, a number of institutions compare each other, same product, same this. So competition is severe. Therefore, following competitors' behavior rather than our own norms. අපි අනුන්ගේ competitorsගේ competitorsලාගේ behavior follow කරන්න නරකයි. අපි අපිටම follow මේකක් හදාගන්න. සමහරට sometimes මේ side customers comment වලින් අර බැංකුව එහෙම දෙනවා මේ බැංකුව මෙහෙම දෙනවා. ඇයි ඔයගොල්ලන්ට දෙන්න බැරි? මට කස්ටමර් කෙනෙක් කියලා කිව්වා අහවල් බැංකුවේ මම අපේ රේට් එකට වඩා 1% අඩුවෙන් දෙනවායි කියලා. ඉතින් අපිට දෙන්න බැරි ඇයි කියලා කිව්වා. මං කිව්වා අපිට දෙන්න බෑ. අපේ cost of fund එක මෙහෙමයි. අපිට දෙන්න පුළුවන් මේ ගන්නට. ඉතින් කස්ටමර් ආගි කරලා මං කිව්වා එහෙමනම් ඔබතුමාට දෙන හොඳම ක්‍රමය තමයි ඔයාට ඒ බැංකුවෙන් අරගන්න. අඩු ගන්න තියනවනේ එහෙන් ගන්න ඉතින්. I know that bank has rejected this application. That's why he come to us. I will have a part done. Understand that. Customers again හැමදේම as it is පිළිගන්නේ. Finally, අපි දැන් කතා කරේ background එක කතා කරා. Why recovery is important. First priority is recovery. Second priority is recovery. Third priority also recovery. To survive for a future. අපේ organization survive වුණොත් විතරයි අපේ future එක survive. එහෙමනම් අපේ සත්‍යද අපි step by move recovery procedure මොකක්ද කියලා. Process of managing non-performing advances. First step එක තමයි ලෝහසෙල්ලේ ගානට එකපස්සේ monitoring, supervision and follow up. So we discuss this next week. What is monitoring, what is supervision, and how to do the follow-ups. To do monitoring, follow-up, supervision, and we find out the purpose of it. The objective is to identify warning signals and identify causes of failure. Identify warning symptoms and why the reason the customer commit default. Causes of default. Then analyze the core problem. What is the exact problem of the customer? Identify the problem. If you identify the problem of the customer, recovery is very easy. We have options, number of options available. So this is our structure of our recovery management program. We start from this, step by step we'll go. And finally, what are the recovery options available and alternatives available for us to go for recovery? Recovery of non-performing advances. Finally, to close out today's class, customer's problem is our problem. That's why we try to identify the core problem. Customer's problem is our problem. Our problem is default. Default has occurred due to customer has failed. So identify the causes of failure of the customer and identify the problem. Then we have a good option to recover that will solve our problem. That's called recovery management. Okay. So thank you. Any questions? Any questions? Okay, 34 students have been registered today. 2 people are left earlier. Okay, any questions? Okay, thank you very much. We'll meet next week and continue with the program. Okay.
Hello.
Hello. Sorry.
So small clarification.
Yeah.
On that credit, the project proposal.
Yeah.
Just
Yeah.
actually, what I want to know is now the 40 million yen. But the Japanese company is investing on this project.
Yeah.
So basically, whether it's like now when you convert it, it becomes about 69.96 million Sri Lankan
Yes.
rupees.
Yes.
So whether it's now he's planning to purchase a property for 20 million,
Yes.
right? So then whether it's not sufficient for the building construction also, or like whether he needs more money to, I mean, to lend rather.
Yes. Now, what the proposal given to you is now the foreign investor is going to invest certain fixed amount. So he agreed
Yes.
that amount will be giving. Okay. Now
Okay.
we have to start from the project cost.
Okay.
Okay. Now land cost is given 20 million. You have to identify what you have to work out what is the building cost, construction cost. Okay. Then next component is machineries and furniture fittings. That also capital expenditure. Then how much need for working capital? So there are three components for the total project. So what is the amount the investor giving? Balance we have to finance. Out of that, how much the local investor should invest, right? And balance part, especially we are going for working, we can go for working capital or part of the financing of uh, what you call movables.
Mobiles. Okay.
Okay, so first you structure the cost of the project, and then see what is the break-even what do you call sales point. Now already given you the sales and the profit margins.
Yeah, that is like for 1 year only with the sales and all, they have
That's
come
right.
up to
That's what
4.8.
given as a just a guideline for their, that is their part.
Yeah.
So we
Yeah.
have to work out and see what is the break-even income level for your loan recovery. So loan component, there are three components: capital, fixed asset, that is building construction, and the land, purchasing land. So total
Yes.
cost is for the infrastructure. So that full amount can be covered with the foreign investors' money.
Yes.
If so, then the other two have to be either financed by the bank. Two components. One is for
Machinery and
medium-term loan, and a revolving facility. Right? Then you work out for the how much of money needed for your 70% margin is that's shown, right? Under that one, 100% how much the sales, in that sales amount is how much. So we go backward calculation. Then
okay.
then finally see whether you have a market to sell that amount of bread. Okay.
Okay. Thank you very
So
much,
your
sir.
viability is based on that, not starting from the amount which are given by the customer and coming down the line, you won't get any answer. Right? Your answer may be very misleaded. So you start from the project and this much of needed, this is what the capacity, this much of sales has to be established, whether you have a market to sell.
Okay.
Okay?